The global economy is at a crossroad. The International Monetary Fund projects global growth at 3.3% for both 2025 and 2026. This is lower than the historical average of 3.7% observed between 2000 and 2019. While the 2025 forecast remains stable, downward revisions in major economies, excluding the United States, contribute to this subdued outlook. The global economy is navigating a complex landscape. Factors such as geopolitical tensions, supply chain disruptions, and the lingering effects of the pandemic continue to pose challenges. Despite these headwinds, there are also pockets of resilience. The US economy, for instance, is projected to maintain steady growth, exceeding expectations. Technological innovation and robust consumer spending are supporting growth in several regions. The global economy is in a state of flux. Policymakers and businesses alike are closely monitoring economic indicators and adjusting their strategies accordingly. The path forward requires careful calibration and a focus on sustainable and inclusive growth. Inflation, the persistent rise in prices, has been a major concern for economies worldwide. However, there are signs that inflationary pressures are beginning to ease. The IMF expects global headline inflation to decline to 4.2% in 2025 and further to 3.5% in 2026. This projected decline is a welcome development, offering some respite to consumers and businesses grappling with higher costs. However, the inflation story is not uniform across the globe. Advanced economies are anticipated to reach their inflation targets sooner than emerging markets. This divergence reflects differences in economic structures, monetary policy responses, and exposure to global commodity price fluctuations. Central banks in advanced economies, having started raising interest rates earlier, are now closer to achieving their inflation objectives. In contrast, emerging markets, often facing more volatile inflation dynamics, may require a longer period to bring inflation under control. This divergence in inflation trends has implications for exchange rates, capital flows, and global economic stability. The global economy is not a monolith, it is a tapestry woven from the economic performances of individual regions, each with its own unique set of opportunities and challenges. The US economy is expected to maintain steady growth. The Federal Reserve's careful management of monetary policy, coupled with robust consumer spending, is expected to support this positive trajectory. The euro area faces a more challenging outlook. High energy prices exacerbated by geopolitical events have taken a toll on economic activity. The European Central Bank is navigating a delicate balance between controlling inflation and supporting growth. Japan's economy is showing signs of resurgence, driven by government spending and a revival in consumer demand. The Bank of Japan's accommodative monetary policy continues to provide support. China's economic growth is projected to moderate. The country faces challenges from a slowing property market and weak global demand. The Chinese government is implementing measures to stimulate growth and manage risks. Emerging markets present a mixed picture. Some economies are benefiting from rising commodity prices, while others are grappling with high debt levels and currency volatility. The pace of economic recovery varies widely across these markets. The US economy, a powerhouse on the global stage, is projected to chart a course of steady growth in the coming years. Vanguard, a leading investment management company, predicts US growth to remain just above 2% in 2025. This positive outlook is supported by several factors, including the Federal Reserve's prudent monetary policy, robust consumer spending, and continued strength in the labor market. The Federal Reserve, tasked with maintaining price stability and full employment, has been gradually raising interest rates to combat inflation. This measured approach aims to cool down the economy without triggering a sharp downturn. The Fed's current projections suggest short-term rates will settle in the 3.75% to 4% range, reflecting a belief that inflation will gradually return to the 2% target. Consumer spending, a key driver of the US economy, remains resilient. Despite inflationary pressures, consumers have continued to open their wallets, supported by a strong labor market and accumulated savings. The unemployment rate, currently at 4.1%, is expected to rise slightly to mid-4% in 2025, remaining at a level consistent with a healthy job market. However, challenges remain on the horizon. Global economic headwinds, geopolitical uncertainties, and the potential for a resurgence in inflation could all pose risks to the US economy. The Federal Reserve will need to continue to carefully calibrate its monetary policy to navigate these complexities and maintain the current trajectory of steady growth. Section 5. European Union grappling with slow growth and inflation challenges. The euro area, the economic bloc of 20 European Union member states, faces a more challenging economic landscape compared to the United States. Vanguard projects below-trend growth for the region, with GDP expanding by a meager 0.5% in 2025. This sluggish growth is attributed to a confluence of factors, including soaring energy prices, geopolitical uncertainty stemming from the ongoing conflict in Eastern Europe, and persistent supply chain disruptions. Inflation, while expected to moderate globally, remains a concern for the euro area. Headline inflation is projected to fall below 2% in 2025. But core inflation, which excludes volatile food and energy prices, is proving more persistent. The European Central Bank, tasked with maintaining price stability in the Eurozone, has been more cautious in its approach to raising interest rates compared to the US Federal Reserve. The ECB is expected to continue raising rates gradually, with projections indicating a main refinancing rate of 1.75% by July 2025. The labour market in the euro area is also showing signs of strain. Unemployment is projected to rise to 7% in 2025, reflecting the impact of slowing economic growth and uncertainty on businesses' hiring decisions. The ECB faces a delicate balancing act in the coming years, needing to tame inflation without further stifling economic growth and exacerbating unemployment. Section 6. Asia's mixed bag, from Japan's resurgence to China's slowdown. The Asian continent presents a mixed economic picture, with diverse economies at different stages of their economic cycles. Japan, the world's third-largest economy, is experiencing a resurgence after years of sluggish growth. Vanguard forecasts above-trend growth for Japan, with GDP expanding by 1.2% in 2025. This positive outlook is driven by increased government spending, a revival in consumer demand, and a weak yen, which makes Japanese exports more competitive. China, the world's second-largest economy, is experiencing a slowdown. After years of rapid growth, China's economy is facing headwinds from a slowing property market, weak global demand, and the lingering effects of its zero-COVID policy. Vanguard projects China's growth to moderate to 4.5% in 2025. The Chinese government is implementing measures to stimulate growth, including cutting interest rates, reducing reserve requirements for banks, and increasing infrastructure spending. However, challenges remain, and the pace of China's economic recovery remains uncertain. Other Asian economies are also navigating a complex landscape. South Korea, a major exporter of electronics and automobiles, is facing headwinds from slowing global demand. India, a rapidly growing economy, is benefiting from strong domestic demand and government reforms. Section 7. Emerging markets. Navigating volatility and inflationary pressures. Emerging markets, a diverse group of countries with developing economies, face a unique set of challenges and opportunities. These economies are often characterized by high growth potential, but also greater vulnerability to external shocks such as fluctuations in commodity prices, changes in global interest rates, and geopolitical instability. Inflation remains a key concern for many emerging markets. While inflation is projected to moderate globally, many emerging economies continue to grapple with above-target inflation rates. This is particularly true in Latin America, where several countries, including Brazil and Mexico, are facing persistent inflationary pressures. Central banks in these countries are responding by raising interest rates to cool down their economies and bring inflation under control. However, raising interest rates too aggressively risks stifling economic growth and exacerbating debt burdens. Despite these challenges, emerging markets also offer significant opportunity. Many of these economies are undergoing rapid industrialization and urbanization, leading to increased demand for goods and services. Technological advancements and a growing middle class are also creating new markets and investment opportunities. Section 8. Risks on the horizon. Uncertainty looms large. Despite pockets of resilience and positive growth projections in certain regions, the global economic outlook remains clouded by uncertainty. The IMF and Vanguard, in their respective assessments of the global economy, highlight several downside risks that could derail the projected recovery and potentially lead to a more pronounced slowdown. One significant risk is the potential for a resurgence of inflation. While inflation is expected to moderate, several factors could reignite inflationary pressures, including persistent supply chain disruptions, strong consumer demand, and geopolitical events that disrupt energy markets. Should inflation prove more persistent than anticipated, central banks may be forced to raise interest rates more aggressively than currently projected, potentially triggering an economic downturn. Another risk is the potential for a sharp slowdown in China's economy. China, the world's second-largest economy, is a major engine of global growth. A sharper than expected slowdown in China would have significant ripple effects throughout the global economy, impacting commodity prices, trade flows, and business investment. Geopolitical uncertainty also looms large. The ongoing conflict in Eastern Europe, tensions in the South China Sea, and political instability in various regions pose significant risks to the global economy. These events can disrupt supply chains, trigger volatility in financial markets, and undermine business confidence. Section 9. The human impact, economic concerns, and public sentiment. Economic indicators and forecasts provide valuable insights into the state of the global economy. However, beyond the numbers and charts lies a human story. Economic conditions have a profound impact on the lives of people around the world, shaping their livelihoods, opportunities, and overall well-being. The current economic climate, characterized by slowing growth, persistent inflation, and geopolitical uncertainty, is fueling anxiety and impacting public sentiment. In the United States, for example, rising inflation has eroded consumer purchasing power, making it more difficult for families to afford essential goods and services. The rising cost of living is a significant concern for many Americans, particularly those in lower income brackets. This economic anxiety is spilling over into the political arena, as evidenced by former President Trump's declining approval ratings, attributed in part to concerns about the economy. The human impact of economic uncertainty extends beyond national borders. In the euro area, soaring energy prices have placed a heavy burden on households and businesses, particularly in countries heavily reliant on Russian gas. The rising cost of energy is fueling inflation, squeezing household budgets, and raising concerns about energy poverty. In emerging markets, economic volatility can have even more profound consequences. Currency fluctuations, capital flight, and rising debt burdens can destabilize economies, leading to job losses, social unrest, and political instability. Understanding the human impact of economic conditions is crucial for policymakers and business leaders. Addressing economic anxiety, promoting inclusive growth, and ensuring that the benefits of economic progress are shared equitably are essential for fostering social cohesion and building a more sustainable and just global economy.